I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, July 27th, and today's trading session, kind of the polar opposite of what we got yesterday. Yesterday, we were sharply lower to start, finished near unchanged. Today, sharply higher, finished near unchanged, and that really kind of summarizes the trading environment that we've been in recently and will likely continue to be in going forward until we get a bigger directional breakout or breakdown, and that is chop, chop, chop. That's the environment that we're in. A lot of opportunities for players on both sides. What's going to be the catalyst to break us out or break us down? Well, obviously, I think a lot of this is going to be hinging on weather. If we catch a rain, I wouldn't be surprised to see more pressure come into the market and break below this trend line here. If we don't catch rain and hot and dry continues to be the pattern, look for a breakout above here. But until then, again, a lot of opportunities for traders on both sides of the market. Now, there is a lot of bad news out there, but for everything, every note of bad news, there's also some good news out there here in some other spots that are very well. That news doesn't quite travel as fast, so keep that in mind. And also keep in mind the seasonality of these markets and try to tune out a lot of the noise that you see on social media. Now, moving over to the soybeans, our bias in our daily commentary is outright neutral. I think there's plenty of opportunities for participants on both sides of the market. Really towards the low end of the range, 1320 to the 100-day moving average would be the opportunity to look to the buy side, and on the sell side up near that psychologically and technically significant 1415 area going forward, right kind of smack dab in the middle of that. We don't see a whole lot pressing at the moment, but again, either side of this recent range that we've been in, I think represents opportunity for those who are not married to a particular bias, and that's the same with corn. The perma bulls and the perma bears are getting just sloshed around and probably getting a little bit of a headache watching these ranges tighten up, because as you can see, I mean, we haven't gone anywhere. Well, we've gone a lot of places, but still about the same price that we were at back in early May. Now, moving over to the livestock side of things, a little range bound as well. We got up towards the top end of the range in October. Live cattle failed to really get out above there and make new contract highs, so probably encouraged a little bit of long liquidation here today. If we see some follow through from that, wouldn't be surprised to see a retest of the low end of the range, which comes in a little bit closer towards 126, which we would be willing to look at as a buying opportunity. Now, with that said, I did pull up the October live cattle contract specifically because there is a bearish seasonal right around the corner that starts on August 11th. We'll have more for you in our daily commentary on that and what the particulars are. But something to keep in mind there, a little bit longer term, looking past the shorter term bearish seasonal. We're still optimistic on live cattle and have been parking that optimism out in the December contract. Now, wrapping things up with the lean hog market, we got up here towards this breakdown point from June 16th. This is a big resistance, or I guess previously important price points, all the way back to May as well. We've so far stalled out here. August is typically a bearish time of year for the lean hog, so we are starting to play it to the short side using not only futures but also different option strategies depending on clients' risks appetite. So we're kind of looking for things to fade off here so long as we can defend the top end of this range and this breakdown point from June 16th. If we can pull back, our target, near-term target, would be at the 100-day moving average and this line here at 88, which represents previous resistance, the breakout point, support, breakdown point, resistance, breakthrough point. So a lot of interaction between buyers and sellers at this 88 handle. That is the first objective if we fail up here at 94. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.